And in our top business story, housing and utility costs soared by more than 5% in December as the UAE's inflation rate rose to its highest level since February 2009. According to official data released by the UAE's National Bureau of Statistics on Sunday, the country's year-on-year inflation rate rose to 3.1%, up from 2.8% the previous month. The December figure was well above the average inflation rate of 2.33% in 2014, according to the Bureau, which added that the December inflation matched the rate in October, which was the highest for nearly 6 years. The consumer price data showed that housing and utility costs, which account for over 39% of consumer expenses, jumped 5.4% from a year earlier in December and 1.3% month-on-month. Food and soft drink prices, which account for nearly 14% of the basket, rose 1.3% year-on-year, but fell 0.9% from the previous month. The UAE is expected to witness continuous economic growth during the year despite the drop in oil prices. That's according to the UAE Minister of Economy, His Excellency Sultan bin Saeed Al Mansouri. The UAE Minister of Economy's remarks came during his speech to mark the opening of the two-day 9th GCC Regulators Summit, where senior officials and experts from regional financial entities have gathered to discuss the latest trends affecting the capital markets. Among the main discussions during the summit was increased collaboration amongst the GCC member states towards developing regulatory frameworks to protect foreign investments. According to the panelists, the GCC market is characterized by its favorable investment opportunities and environment, particularly after the MSCI upgrade of UAE and Qatar to emerging market status, which places them in a strong position to overcome economic uncertainty. It was added that unified policies for financial markets, robust legal framework to allow flexibility for investors, coupled with improved knowledge, should ensure continued progress. Although the decline in oil prices may raise concerns, the Minister of Economy added that the UAE had witnessed economic growth rate of 4.5% last year, and despite the current challenges, the country, along with other GCC member states, should experience continuous growth in the year ahead.
We have to wait and see what will happen in 2015 with the oil prices. We are at the beginning, at the start of the year. There has been a lot of challenges over the past few weeks concerning the prices of oil and the way it has went, for many nations, including, of course, the GCC countries. And for the UAE, as I said earlier, we have managed to impose a policy of diversification that has helped us. And then we also made sure that the reserve is sufficient enough to address this kind of drop in the prices of oil for a certain sustainable period of time. So a year or 2 years, but if it extends beyond 2 to 3 years, I mean, it becomes an issue. It becomes a challenge to all of us. My expectation, I don't think it's going to go that far. My expectation is by the middle of this year, we should see some positive turn in the prices of oil due to the turn in the positive turn, the expected positive turn in the economies of the major blocs such as the EU, US and China.
In a new set of bank results announced, the country's two Islamic banks displayed their balance sheet strength and high profitability, reinforcing the robust health of the UAE's banking sector. Dubai Islamic Bank, the largest Islamic bank in the UAE by total assets, reported a net profit of 2.8 billion dirhams for 2014, up 63% compared to 1.7 billion dirhams for 2013. Dubai Islamic Bank's net financing assets at 74 billion dirhams at the year end was up by more than 32% compared to 56 billion dirhams at the end of 2013. Additionally, the bank's total assets were up by 9%, 123.9 billion dirhams, compared to 113.2 billion dirhams at the end of 2013. In comparison, Abu Dhabi Islamic Bank Group's net profit for 2014 increased by 20.7% to 1.75 million dirhams, compared to 1.45 billion dirhams in 2013. The bank's net revenues also increased by 16.6% to 4.58 billion dirhams, compared to 3.93 billion dirhams. The bank's customer financing assets increased by 18.2% to 73 billion dirhams, while customer deposits increased by 12.3% to 84.8 billion dirhams over the same period. Looking to Abu Dhabi Commercial Bank, it reported a full-year net profit of 4.2 billion dirhams, up 16% compared to 2013. The bank's total assets crossed 200 billion dirhams mark this year, with bank's net loans and advances increasing 7% to 141 billion dirhams in 2014, as customer deposits increased 9% to 126 billion dirhams. The euro fell against the US dollar last week following another round of quantitative easing measures introduced by ECB President Draghi on Thursday. In its strongest move yet to combat deflation and stagnating demand, the ECB introduced another round of austerity measures at 60 billion euros per month in asset purchases, which saw the euro drop across its major counterparts. Markets were also keenly watching the snap election results from Greece and its possible effect for a popular campaign by Greek politicians for debt restructuring. To find out more about this and to gauge the week ahead, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East.
Well, we've seen the Euro-USD rally to kickstart this Monday morning's trading session, as it seems that market participants have shrugged off the unfavorable release coming out of Greece with regards to the snap elections being won by the Syriza party. Now remember, the Syriza party has been long looking forward to getting discounts on their overall debt. They want to restructure some of their debt that the Eurozone have imposed on them. They want to come out with large spending measures, and overall this was seen as a very, very negative development. And the fact that they got into power over the weekend would raise a lot of doubts with regards to the future of the Eurozone and the whole Greece issue that we've seen re-emerge since 2010, 2011. But overall, we've seen the euro pick up since Monday morning's trading session. We're expecting probably the euro to find support between 1.10 and 1.1350 in the week ahead. We should see it range between these levels in the week ahead. Overall, there's a lot of data that we'll be watching from the Eurozone. We have Eurozone consumer confidence. We have some industrial production figure coming. And overall, we also have the inflationary data coming out at the end of the week on Friday. Now remember, we're expecting inflation to come negative again. It should come at around minus 0.5%, which is why we saw ECB President Mario Draghi infuse around 60 billion euros per month last week, which is what triggered the move in the euro to 1.1 levels. But overall, we're expecting good support at 1.1 for the euro, with upsides capped at 1.1350. It's also going to be a very, very big week for the US dollar. We have the FOMC rate decision due out on Wednesday night. That's expected to remain unchanged. We can probably see some change in rhetoric, but overall this will be pretty range bound for the US dollar. Friday we see the US GDP release. That figure is expected to come in at 3% or 3.1%, following last month's stellar reading of above 5%. So this should lend some support to the US dollar, but overall markets will remain range bound with a slight bullish sentiment with regards to the euro. If we look at gold, gold remains a good buying opportunity now. If we see any dips to 1260 or 1270, which is the initial support levels, we like buying at these levels with an upside target probably capped at around 1330 in the week ahead.